Our second panel today is titled Innovative Solutions for Increasing Banking Profitability in Africa. This panel is going to be looking at how financial institutions across the continent are driving growth and inclusion through new business models and technology. It is my pleasure to now introduce the moderator for this session, Karima Ola. She is a partner at Leapfrog Investments. She leads the African Financial Services Investment team at Leapfrog. She has driven landmark investments across the years throughout the continent. And fun fact, was also named by Bloomberg one of Africa's women to watch. So it is a privilege to have you moderate this session.
SMEs contribute 80% of jobs and 50% of GDP, and yet today they have little, they're very short on access to working capital, they're very short on some of them are still, when it comes to digital banking, acceptance of payments, there's still a big gap there. Remittances, almost 100 billion to date, today when you, whenever you want to make today in Africa, it costs just under 8% in order to make a cross-border payment of remittances into the continent. And in South Africa, it can get up to 13%. It's actually the worst in the G20 numbers. And then cross-border payments, every SME has to buy inputs, and often they have to be imported. If a trader wants to trade between Lagos and Nairobi, they need to go into the US dollars first. And with that comes a leakage, which basically adds, a good 1 to 3% onto the cost, and certainly a huge, big margin on the FX bid-offer spread. So with that, we're kind of thinking about what are the opportunities and how do we over the next decade, not 20 years, not 30 or 50, over the next decade, add another 10% in ROE, an additional 10% ROE to banks' profitability. And and when we kind of look across that today, there are a number of innovative solutions that we're looking across. We know what stablecoin is already delivering. We've also blockchain in terms of custodian services and what that could do for capital markets. And then there's just the digitization of the offering, given the smartphone penetration across the continent. So the opportunity is huge. And so for us, this today is we're thinking about how do we add that extra 10% onto ROE given the opportunities. And I'm going to start with Mukwendi, because you are the bank CEO sitting amongst us. So I'd like to start with, how are you I'm going to ask two questions in one. First is, how are you delivering for customers, especially on across the band that I've just explained, and then the other is, where do you see that addition to ROE and bringing down cost in particular? And I think for SMEs in particular, where we understand that cost income ratios are very high, how do we see innovation as helping bring that down?
Thank you. Is my mic working? Just checking. Okay, perfect. Thank you. I'd just like to shout out to the Zambians out there. I see our High Commissioner, Her Excellency, is here with us today. Welcome. And just to give a bit of perspective as to who we are as Zanaco, in terms of the introduction. Zanaco is the largest bank in Zambia. Zambia is in Central Africa and is surrounded by 8 countries. And so we consider ourselves to be land-linked. And so to speak to the earlier conversation that was taking place in this room, we believe that there is more opportunity than challenge in Africa. And the same applies to Zambia too. And as Zanaco, we have proved over the years that profitability can be achieved through banking. So we were the first bank in Zambia to achieve a target. I know that we should stick to the dollar numbers, but we believe that this one just sounds better, of 1 billion kwacha a few years ago. And that just shows how we can still be profitable. There's all the discussion as regards whether the mainstream banking is still something that can keep growing. It is. However, we do have to pivot and change and use technology to our advantage. And technology does give us the opportunity to scale up, to be more inclusive, and to be able to deliver at a lower cost. And we do believe that once we're able to achieve this, we'll see those ROEs keep growing. And bearing in mind as well that in Africa, Our ROEs are double digit, generally speaking, for most institutions, most banking institutions. For that to be maintained, we have to be able to lower the cost to serve and to also scale further up, and that is based on inclusive growth. That then addresses the technology issues, which to our mind is a bridge to the future. We have a youthful population that is very tech savvy, and they love their phones and whatever is coming after the phone. And so we believe that in banking as well, we need to be able to cater for this and partner with the fintechs, the edutechs, and whatever techs are out there to be able to deliver solutions to our community. So that is our view of Zambia. It's a mining country, agri country, and also more recently an energy country, and we as Zanaco are playing our role. Thank you.
Thank you very much, Mukwandi. And I heard a number of things there, partnerships in particular on technology, and then also just thinking through about how we get inclusion. If I could just press you a little bit more on that, which is, this is a question on this additive ROE. So I won't ask you what your ROE is.
It's in the double digits. That's enough.
Great. That's great news. So in the context of adding another 10%, if we're going to be bold and ambitious, and given the number of underserved, whether they are young or whether they're the young or SMEs, where do you see the big movements coming from?
We still have a lot of rural populations in Africa and in Zambia too, and a lot of that population is underserved. We also have the youth that are largely underserved, and to the point that was raised earlier on, do we take that as a challenge or as an opportunity? So if you look at just simply the population of Zambia, that's about 20 million people, but also the population in surrounding countries is about 150 million people. And if we were to make $1 from each by being more inclusive, then that's a starting point. Now, what products do they need? What is the gap in terms of financial services, and how do we cater for that? In Zambia, for example, as Zanaco, what we've been able to do is over the years, we've identified various solutions and opportunities that we need to address. So for example, most recently, we were part of a syndication. We led a syndication, which was the first ever of $250 million locally done with the banks in Zambia. And this was for an agric entity that is now exporting fertilizer to the region. That then gives us that ROE that we're looking for, but it also gives capacity for the farmers in Zambia and in the region to produce better and make more money, and then they become our clients. So it's a multiplier effect that we're looking for as Zanaco, and we believe that we can.
It's fantastic, and I do think in the context of agriculture and access to food, there are also sort of second-order ripples that come out of just supporting the agricultural sector. Now, it's such a pleasure and actually a privilege to have you on this panel because you're coming from the banking CEO point of view. But I'm going to pivot now to the investors, and in particular, I'm going to ask you, in the context of innovation, and Mukwandi talked earlier on about partnerships, so if it's about reaching the underserved across the board, where does private credit play a role? And in particular, where do you see some new technology, AI, tokenized assets playing a role across the continent?
For sure, thank you. And hi everyone, good morning. So I work with a fund called TLG Capital. We've been around for 15 years. We focus on credit solutions for borrowers and banks on the continent. We invest out of 4 funds. Our latest fund was raised in April with the AFSIC, Soweto Fund, Nor Fund, BPO France, but also notably 50% of our investors are commercial investors. So family offices in Singapore, Monaco, Dubai, New York, who want exposure to the African consumer, and particularly are very focused on downside protection, not losing money, living to fight another day, and ensuring that their capital is returned. Our first fund has delivered more than 10% net for our investors over the last 5 years. And with our second fund, we're really focused on being good partners to banks. Now, what do I mean by that? I think to the question that you're asking, Karima, banks in Europe and the US and other markets don't really make as much money from lending as banks in emerging markets in Africa do. And so normally the criticism or what everyone says is, Mukwandi, you need to make a bigger spread, reduce your cost of funds, lend to more risky projects, get more net interest income. But actually, it's through syndication, it's through origination, it's through leveraging your branch network and the people that you have all over the country, the people in the center of Zambia who are growing soy, the people who are importing the fuel from the pipeline, all of these folks who you can serve because you have legal structuring and a branch network amongst you. How can you have partners to provide the liquidity that you need for things that may be outside of your credit policy? Or you have an asset liability constraint because you're funded by deposits and therefore you cannot originate loans beyond a certain tenor. We see that as our job. And in the last 6 months, we've done this in Djibouti, Tanzania, Nigeria, Ghana, and we're looking to do something in Zambia now. To more directly answer your question, and I'm aware everyone else should probably get a chance to speak, it's focusing on origination syndication. It's the fee and commission line that I think banks can use to, at zero risk assets deployed. You don't need extra deposits, you don't need extra funding, you don't need extra liabilities. You use your balance sheet, which in many cases is constrained by the sovereign rating and may be stronger than the sovereign balance sheet. You leverage that and you get effectively infinite margin P&L in the fee and commission line, and that's what we help our banking partners to do.
And how does that specifically deliver for the sort of missing middle, the SMEs, who are the ones who are really short on working capital?
The borrowers are at the heart of it. I mean, they're the ones who maybe don't have a loan structured to their requirements. I'll give you an example. In Nigeria last month, we closed a transaction for a charter aviation business, right? So they move people around Africa in airplanes. They funded an acquisition of a plane with a Naira loan in 32% interest rates for 3 years with monthly amortization. A plane has a useful life of 20 years. They're generating $7,000 per hour that plane flies. They do not need to be borrowing in Naira and paying principal every single month. And so we've done this for an aluminium recycler in Nigeria. We've done it for a telecoms provider in Djibouti. The point is, how can you give longer tenors, better breathing space and oxygen? And somewhere around in one of these rooms, the folks from Manufacturing Africa are here. They're our implementation partner. So thanks to the FCDO, McKinsey, BDO, ESS, Enderama Works, all of these guys will work on site for a $3 million EBITDA SME who would not be able to justify paying for these fees otherwise. So it's structuring its partnership, and actually all of these loans are designed with a loan to be made to one of the bank's clients. So the SME is the direct beneficiary of the funds.
And how does that scale? So we've got Mukwendi here, sitting here. We've got you.
Yeah.
So at the end, how does that scale to basically then become part of the additional ROE for Zanaco, as well as you scaling across the continent? What do we need to do to accelerate?
It scales by us approaching Mukwendi in June or July saying, hey, soy season is coming, right? No, but seriously, soy season is coming. All of these people are going to need to sell. They're going to need storage. They're low on working capital. Wouldn't it be nice if there was more feed in silos instead of it just leaving the month after harvest? Well, let's take a $70 million portfolio of all of your soy producers and carve out 10, 15% for us and work with the SMEs directly. It's portfolio financing.
I'll remind him.
Yeah, you can quote him on that.
Okay. And I will be following this, so I'm hoping that great things come for the farmers as a result of this conversation. Ibrahim, over to you. And if I could just sort of extend further, I want to pivot into cross-border, and in particular, the Africa Continental Free Trade Agreement. How do we see innovation, and again, extending the same question, just the tokenization, AI, delivering and adding to that growth across. So we're basically solving problems, but also speeding, accelerating growth and profitability.
Okay. Morning, everyone.
Please introduce yourself, because it's your first question.
Oh, thank you. My name is Ibrahim, and I'm the head of Kantara Private Capital. So, Mukwendi, you made two amazing statements amongst many. The one was bridge. Kantara in Arabic means bridge. So what we see ourselves is we are the bridge from investors to investees, tradition to technologies, and just helping each other across the continent. We don't do transactions, we do trust. That's my sales speech, just by the way. So Kantara Private Capital is also Sharia compliant, which I think is important because 49% of Africa is of the Islamic faith, and 72% of that is underbanked or unbanked. Having the youngest population in the world from an Islamic perspective, and just being a bridge, a Kantara, if I may, to investors around the world. That's what we do, part of a numeral group, where innovation is not a pillar, but it's part of our DNA. So for us to have this opportunity to chat and share our vision is something we're very humbled by. And you mentioned, how do we bridge, trade, Africa Continent Free Agreement? How do we sort of bridge that with technology? I think for me, the first exciting part is this Africa Continent Free Trade Agreement, because now you bring in one big continent together. Smart contracts, for me, is something we've got to look more into, especially for cross-border activities in trade finance. For those of you who are involved in trade finance, you know the plethora of documentation that needs to happen to and fro banks. There's a timing issue, there's a working capital issue we've got to sort of take care of. But if you do a smart contract, it's instantaneous. So you speed up, the sort of power of trade. There's also regulations. You've got so many different countries, so many different regulations. How do you streamline it so that we can allow for faster commodity movement as well as transactional movement? So I think I'm a very big proponent of smart contracts. I think it's incredible, overlay with stable coins to allow for less volatility in currency fluctuations. So that's where I think we should definitely look into from a continent growth perspective, especially now to use technology with trade. And as a group, we're definitely very keen on doing that as well.
Thank you. As you talked about partnership, and I'm sorry to do this to you, Mokwande, but here we are again. So how do you see yourself partnering it, with the banks in order to grow Islamic finance, for a start? And then the other question is on the remittance.
Yeah.
How do you see how do you see innovation contributing towards that coming down to below 2%? Because that's where we've got to get to for the Africa consumer.
Yeah. To answer your first question, I think we'd love to offer banks product. Mm-hmm. Product for me is actually the innovation. The AI in fintech is a distribution element, but if you've got product that speaks to the entire continent, and I'm being a bit biased towards my mandate, having asset-backed transactions, which caters for Islamic finance and other investors or borrowers, right? So we have ideas, we've got product that we would like to now distribute to the African and international banking community. So trade finance, very simple one, on a Muraba construct. We'd love to do that, overlaid with a smart contract. We're looking at money market type of products to allow banks to get a yield on dormant, deposits. So happy to chat to Mokwande and all other CEOs across the continent.
And in the way that just did now, could you just help us in the audience to sort of, by taking us through one of those products and that you've done historically, or what the precedents you've set working with banks?
Yeah, sure. So my claim to fame, if I could say that, and just allow me to market myself. We did a sukuk, which is an Islamic bond, and it unlocked two things. It unlocked the government of South Africa's ability to diversify their sort of funding pool, which is cool because your cost of capital comes down and you have this diversified sort of concentration risk. What it did do, which was my sales pitch, it was inclusivity, right? Because you structured a product now which allows 23% of the world's population to participate in building an economy. So when we did that sukuk, and when the National Treasury directors listened to our sales pitch, which, yes, it was charming, but it was honest, that we want to be inclusive. It made such a big difference to the bank's balance sheet, the borrower's balance sheet, and the community at large. So that's one product. The other one we're working on right now is one of the first of its kind. It's an Islamic structured note in Africa with an overlay of some sort of technology which I can't share because of NDAs. But we're right there. And from what I got told, it's the first of its kind in the continent. So we're very excited, very humbled about it, and love to share that once we're good to go to market.
Thank you very much. Now, you didn't address the one, which is how do we get costs down to less than 2%?
Of course. I think
Cost of remittance.
Cost of remittance. During our chats to this
Yeah.
to this conversation, I think that there was such a big concern about it, which I appreciated. I think it's to use technology. It's to make sure we educate people first of all about the product and technology that is out there. I think we also got to be very, very forthcoming and proactive with regulators. A lot of it, that cost comes from regulation, which we understand, because they want to make sure there's no money laundering and all those evil things out there. But we need to engage with them. But I think we also need to have just using, an asset-backed coin to allow for remittances to move between countries and continents. So that's pretty much where I think the solution lies. Because, like, for example, in South Africa, it's expensive, as you mentioned, but it's also limiting into the amount that you can sort of transfer, because based on your license and whatever. So there's the conversation we've got to have with regulators to say, well, you want to aid in movement of funds, we're going to have to chat with you to see how we can assist you to bring down those costs.
So stablecoin. And we actually, we've seen a number of remittance players across the market who are already using this, but principally at the B2C. And we all know that most of the cross-border transfers go through Mukwendi and SWIFT. And so the question is, how do we get that moved? And what are the stablecoin use cases for banks that you're already seeing at the operator level?
We're seeing a shift. And that is because some of the regulatory issues are being addressed through new mechanisms. Technology is one. And what is now happening is, there's the new ISO 20022. I'm being a bit technical here, but because of that implementation, which is coming up during the rest of this year, the expectation is that all transactions on SWIFT will have clarity in terms of who's being paid, all the way through to who was originating the transaction, based on particular documentation that will be required. So that will then eliminate a lot of the costs that is based on KYC and just making sure that there's compliance all the way through and we know exactly who's getting paid. And if the transaction is not clear as to who the beneficiary is, it will bounce back. But what that will also do is that all the transactions will be straight through and very quick. And in so doing, it will lower the cost of actually transacting, because a lot of those regulatory issues are what result in the cost. And so with this new SWIFT guideline, our expectation is that it will begin to have the impact that we're looking for. But beyond that, the technology is also allowing for people to use their mobiles to make cross-border transactions. We have AFSIC and PAPS that are coming up. They'll make it easy for Africans to exchange in their own currencies. And by doing so, you eliminate the cost of the transition through another currency, yes. And our expectation is that with all these initiatives, it will get cheaper. And the transactions will begin to grow, and it will also get easier because compliance will be addressed. So there are a number of initiatives that are underway that will eliminate a lot of the cross-border issues.
So this is really exciting, because you're saying costs will come down, and this is something that's already in place.
Yes.
Costs will come down, the time to settlement will come down. And then I imagine also, if that's happened, if the time to settlement is coming down, then liquidity will also mean that the balance sheet is sort of kind of getting that through a few times. So that's another big ROE additionality.
Yes, because then you can cycle the money a little bit more, and that velocity then means that there's more of a return. And beyond that, just the simple fact that people will be able to get their money quicker will mean that the economy is growing better. So there are all sorts of initiatives in that space. And we do understand why the regulators have been so strict about this and the money laundering issues. We're just glad that we're able to find a solution that works for everyone.
And on the KYC and compliance part, are you getting any benefits from innovation that AI, KYC checks, AML, CFT, is that something that you're also seeing in your space?
Certainly. I mean, within cybersecurity, with the advent of technology and what it's doing in our sector, we have to use it more aggressively to just address some of the issues in terms of the cyberspace, cybersecurity, and making sure that we know who we're dealing with. And technology helps us to do that. So we're able to actually tasks that we had to do in 3 days, we can now do in 10 minutes to just verify the ID and just make sure that we're dealing with who we think we're dealing with. And I think with time, it will even get better. So everything is just coming together now, and we're just looking forward to the pie growing bigger, various initiatives so that our Muslim community, our partners are able to deliver. And just to mention that Zanaco also has shareholding, joint shareholding. So we've been talking about the possibility of partnering through FMO, Norfund, Rabobank. These are partners that we share. And even BII, we've partnered as Zanaco. So I think it's all coming together nicely.
So you heard it first, audience. Our next 10% in ROE across bank profitability is starting already. So I think just the changes you talked about in SWIFT alone, if we just have the sort of shift of money moving at a higher velocity, will be huge for the continent at a time when I think macro shifts has actually reduced the FDI flowing into the continent. Ibrahim, before I go on to so you put your hand up. Did you wanted to say? I thought you might want to say something in response to Mukwandi's comments.
I'd actually like to ask a question. The initiatives are amazing from SWIFT as well, but it's in its infancy stage at the moment, right? If I'm not mistaken.
We've tested already, and
Yeah.
in fact, we went to market with it. We were compliant just last month,
Wow.
and what we found was that we need to educate our community.
Yeah.
Because what happens is people don't tend to put all the correct information, and so if there's anything that is missing, then the transaction drops and becomes a manual transaction. So once we've educated the community sufficiently, we should be able to actually implement it properly. But in the meantime, what we're doing is instead of asking for 100% compliance, even if we're to drop it to 70% or 50% compliance, it's still good. Then instead of having limited in full, if a customer writes LTD, it will still go through, but at least the name will be right. So there's some measures that are being taken to just make sure that as we educate the public, we're also able to keep the transactions going straight through. In fact, as Zanaco, we just won an award which was given on straight-through processing, because we're able to get our transactions straight through without manual intervention. And that's because of some of the initiatives we're doing in this space.
Yeah. That's wonderful. I asked the question because there is competition now in the space, right? So time to market is most important, because you got businesses and upstarts that can do a stablecoin remittance in a flash, and kids are tech savvy. Right, so you got SWIFT, and I'm quite happy that they're actually now beginning to pivot into in today's technologies. But the question I'm asking is, are they moving fast enough to be still the dominant sort of facility to transfer cash, or should we be watching ourselves on the other side to say, well, that young upstart was nimble, was quick, and would be a sensation on the continent, would sort of take market share?
Oh, we're happy to work with all of them. We don't have a challenge with pivoting beyond whichever partner, if it works for our customers. That's our focus. And what we just need to be sure about is that our regulators are happy with whoever we're partnering with. Once the due diligence is done, we're happy.
Okay.
Well, this is all great news. I mean, I think that certainly bringing down the cost is really important. But actually, what we're seeing is that people, the young savvy kids are already using stablecoin. We know that there are those fintechs out there. The big thing is the bulk of B2B cross-border is staying with the banks, possibly because of, I'm sure, trust. So they want speed and they want low costs, but trust is more important, it would seem, which is why they would stay for up to 5 days on SWIFT. But if the banks are starting to move, and it does sound that, that this is coming through, and in terms of timing, it's 12 months, 18 months?
3 months.
Yes. Must be this, yeah.
Then we're in business, because I think that makes it more difficult for the B2B, which is let's face it, the bulk of all the transfers that we see across the continent today. I want to make sure I capture, welcome Hossam and Jamil. If I could start with you first. If you could just you've heard what we've talked about. The big question here, and I'm repeating it for Hossam, is how do we add another 10% to banking profitability, another 10% ROE in addition to banking profitability, using the opportunities that we see, whether it's the youth, SME opportunities, and then the innovation that we're seeing in stablecoin, AI, and digitization. So where do you see those opportunities for innovation?
Thank you. So just a quick intro. So I chair a microfinance bank. The most important person in that bank is sitting in the audience is the MD, so I can't take too much credit. But we turned, he and his team turned around that business from loss-making to, we made about $3 million profit after tax last year. But I've also, my background's private equity, so I've also often been with large, mid-sized companies negotiating with banks around some of the things that they do. So I kind of look at it from those two horizons. And when I think about a bank, I think broadly about four things, right? So I think about, to make it effective, it's cost of financing, it's HR, people and how it's structured, it's distribution mechanism, and it's products, right? So you're trying to find innovation broadly in those four things. And we've talked a little bit about product innovation in terms of whether it's doing a similar thing but in a slightly more innovative way or a particularly new product. Cost of financing, I think, sometimes is the more complicated side of things. But, you know, frankly, if you want to increase your return of equity, you look at how you increase your debt, right? Okay? And then you'll increase your return of equity, or other things being equal. Around the HR side, so if you look about, banks tend to be quite conventional in how they recruit people or what they look for people, but you've seen, so if you look at the South African bank Capitec, they brought quite a lot of people out of the retail sector, and that had success, and particularly around how they marketed to population. So I know we'll talk, and we'll talk about sort of technology and innovation, but I just wanted to highlight, for me, it's often looking at those sort of four broad things and looking at ways you can innovate, not just around technology, but other things that you can do to improve your profitability. So that's what I'd just quickly like to highlight.
Thank you. And it's interesting you mentioned Capitec, because South Africa is one of the most banked countries on the continent, certainly in sub-Saharan Africa, and yet Capitec, as a latecomer, though now they're quite established, and they've now become an established player. But even with Capitec, today, everybody gets paid, they take their money out, and South Africa is a cash economy. So what do we need to do to make sure that the use cases for the technology, that we're using technology to create opportunities for those digital use cases so that money stays digital? So
look, it's a good, somebody a long time ago said to me, a wise old person said to me, Jamil, live in a hot country, save in a cold country, right? Okay? And I'm hoping that will change now. And so I think, and I'm just quickly going to go into some of the challenges around innovation for banks, right? So partly, especially, a lot of the non-urban community, but even urban, they don't trust banks, right? Okay? So you have to kind of change that psychology. The second thing is that one of the limits for me, innovation with a bank, is that it's making a lot of money on fairly basic services, right? Which you don't see so much in the West. But, we're talking about remittance. I don't know the economics, but I suspect one of the issues about reducing the cost of remittance is they just make a really good margin on it, right? So you've got to find other ways to make money as a bank. When with small-scale agricultural farmers, who I work with businesses that deal with them, you're also looking at where they're charged relatively a lot of money just to move their money or just to go and get their money. So I think that is what, those are some of the things that impact that innovation or people keeping their money or saving or utilizing banks more so than it's used in Europe. So anyway, I'm going to hand you over to him.
Yeah, I need to move over to Hossam. Thank you. And actually, in many ways, it's very useful to come to you last, because you're a PE investor across the space, and in particular, APIS has been spearheading fintech technology and ways of reducing the cost of service. So for our audience, how, in the context of that additional 10% ROE, where do we see those opportunities coming from over the next few years?
Sure. Thank you, Karima, and apologies, everybody. I'm very happy.
Very quickly.
Yeah, my name is Hossam. I'm a partner in a private equity firm called APIS Partners. What we do is we provide growth capital, so we come after venture, and we're a single sector investor. So we invest only in tech-enabled financial services, also known as fintech. And we're basically been investing across Africa, South and Southeast Asia, and our more recent fund has a global remit where we're also investing in Europe. And I apologize for joining 10 minutes late, but I'm very happy to be here because having a flight where the pilot decides not to take off for technical issues and then deciding to take off 3 hours later is not a very interesting experience for 8 hours. So very happy to be on the other side of the journey.
You're here now, and we're
Yeah,
glad
thank
you're
you.
here safe.
So basically, look, I think what we do is we back tech-enabled financial services businesses. So we're not trying to eat revenue from banks. We're trying to democratize the products. And banks, yes, Capitec has done a good job in trying to democratize products, but they haven't really. It's like they've done a good job, but we invested in Time Bank in South Africa, which is a very highly banked market. And basically what they do is it's a neobank or a digital bank, but with a South African flavor, where basically they have a physical presence model through kiosks that are present in some chains of supermarkets and churches, where consumers can go do their KYC. Now it's becoming more digital, and they do everything else digitally. And they introduce, so basically the onboarding is simpler. So basically for many of the businesses we invest in, it's like comparing an iPhone to and kind of like not a smartphone. When you come to actually dealing with the onboarding, with the KYC, with all the process. And banks are still going through this journey, and the pie is big. So this democratization going to the unbanked, or in the case of South Africa, they're underbanked because they are banked, but they're not being serviced, and offering them products that are not offered by banks. So for example, in the case of Time Bank, we started offering a buy now, pay later product, which is usually not offered by banks, and it's called More Time, as More Time. And it has been a huge success because obviously consumers want to keep the relationship with the bank, and they need buy now and pay later products. So having this offered within a banking environment was a very successful product to launch. So these are examples of how you can use technology to democratize the distribution, to get reach to the consumers in a cheaper manner, and to offer products that usually are not offered. When I joined, you were discussing, of course, cross-border money transfer, which is an area that has been very difficult to disrupt. So we're investors in two businesses that are, again, not trying to compete with the SWIFT system, but definitely they are offering a substitute. So the first is a business called DT1, which is using the MNOs, the mobile phone networks coverage, to allow consumers to transfer airtime from one country to another. So if you are someone from the Philippines working in Saudi, you can send a gift to your nephew by just sending them airtime to their money. This is money transfer. Yeah, it's not using SWIFT, it's not using banking infrastructure, it's using MNO's infrastructure. So it's more of an embedded finance product offered through the MNO network, where MNOs can monetize the financial services, and the businesses we're invested in is an enabler to allow this to happen. Another business that actually spun off, or basically the same founders that came out of this business created, is our most recent investment, a business called Tunes, where it's basically just doing money transfers across border for SMEs, for businesses, and for consumers, parallel to the SWIFT system. It has very solid KYC, it's regulated in 180 countries, and it is faster and trusted. So I guess.
Thank you very much. If I could just conclude, I mean, I think what we, sorry, it's just, what we're hearing is that, there is a lot of innovation, whether it's embedded finance, whether it's tokenization using blockchain technology, stablecoin, or just digitizing operations to make the cost of serve come down. And so what we know is Africa, given the consumer base, is growing, and it will grow. And now I think with what we've heard today, I hope you also are convinced that we'll also see the profitability growth, given that we have a one-in-a-generation opportunity to actually raise ROE, as well as increase inclusion, which I think is super exciting in making sure that everybody's covered, and we bring those who are furthest behind along with us at the same time. Anyway, thank you very much for your attention. I'm sorry we didn't get to Q&A, but I hope this has been helpful. Thank you.
Thank you.
And thank you very much to my colleagues.